This is the weekly review for the week of April 10th to April 14th, as well as this week's Sunday preparation. So, coming into the charts on Monday, um, I was leaning bullish because I saw that we had this sell side um, raid here with SMT last week, displacement to the upside, and we had this nice fair value gap breaker, order block, and balanced price range kind of all nested here. So initially, I mapped out um, this as a theoretical long setup to previous week's high, but I didn't want to just directly enter um, in here because it was Monday and I just didn't want a chance that Monday was going to make the low of the week because Tuesday is the more high probability that we have the low of the week. So I just waited to see if we got any lower time frame bullish price action in here, and that was the right call because I put my stop, hypothetical stop, right below the fair value gap below here, and I literally would have just gotten whipped out, and then price would have made it to take profit here on CPI. So going down into the lower time frames for Monday's trading, um, the 9:30 setup, I was looking for a run up into the low resistance liquidity run above here. So we had just been going down all of the morning session. And then in here is the fair value gap breaker and order block. And it does extend farther down, all the way down to this candle here. And I did also note how the bodies of the hourly candles were respecting the mean threshold of that bottom order block here. So we closed above. But going back down to the 1 minute, 9:30 gave us a setup where we had this break in market structure here, and I entered in at the mean threshold roughly. I marketed in here, and then I was looking to take a partial up here at these relative equal highs, with the ultimate target being these relative equal highs just underneath this low resistance liquidity run. And I took half off here, and then I moved my stop to break even. And I was anticipating this order block to hold, but it didn't, and we came back down into this fair value gap, touching the breaker again, and then rallying up. And I think that this was okay because this here, in hindsight, looks like a much clearer break in market structure and RTO here than this high was here. Because this SMT right here with NAS was not confirmed, obviously, until we rallied away here, right? When price was coming down here, this could have easily just wicked down and taken the low here. Um, so I think that this retracement here is permissible. And looking back, that this would have been probably the more ideal entry after this clear confirmation of break in market structure here, and then targeting the relative equal highs created here, and then up into the low resistance liquidity run up here. So that was the trade that I noted for the AM session. Um, right, and the most important thing was because we've been going down this whole time, we should expect some type of retracement up, regardless if this is going to retrace up and then go down, or retrace up and just continue going higher, which is what we did here because we had a market maker buy model. But regardless of what price does, there should be some form of bullish price action after we see some type of displacement here that's going to at least retrace up into the fair value gaps up in here. So after I saw this price action here, a little bit clearer on the 5-minute basis, we took this sell side here, came back into the breaker during lunch. I was looking for a potential retracement down into the fair value gap and breaker here, because by this point at 1 p.m. here, I was pretty confident that this was going to be a market maker buy model, taking these equal highs and returning back up to the new week opening gap, because Monday is typically consolidation. So we're going to gravitate back towards that new week opening gap on Mondays typically, and we're all the way here pretty far away from it, so it's likely to go back up there. That's what did end up happening, but there was no opportunity for a entry. I wouldn't be comfortable taking anything in here. There's nothing clear that I saw. And I did note that we had this bearish SMT with the original consolidation high. But again, the reason why I ignored it was just because of that bias, that I thought that we were going to take these highs and gravitate back up towards the new week opening gap, because it was a Monday. So that's all I noted in my journal for Monday's trading. Coming into Tuesday, I was a little bit more confident in my bullish bias on Tuesday, thinking that previous week's high was going to be the draw, because Monday had pretty nicely respected this higher time frame level and traded away from it. So that's why I was looking for bullish price action on Tuesday, and we did get that delivered, but that was in the late AM session. So I was really just watching the 9:30 to 11, and all we got here was consolidation. There was nothing in here that was notable. So after that, I pretty much just closed the charts. But we did end up getting a setup here inside the H4 fair value gap. We took these equal lows, this sell side had displacement up, and then came back down to the fair value gap and breaker and traded away from it, coming all the way up to take the high of the day. And then in the PM session, the last hour of trading, I did note a nice setup where we had the high of the day formed in the last hour of trading, and we also took these relative equal highs, buy side liquidity. And not only that, on Wednesday, that's CPI. So typically price is going to consolidate ahead of CPI news. And we have the new week opening gap here. So that's, if price is going to consolidate, that's likely going to be the draw on liquidity, because we formed the high of the day here. So, and had this displacement down. So it's not likely to continue up and make new highs for the week. So that's why I think that this trade had enough confluences to merit an entry, and having a partial at the fair value gap below here, and then the ultimate take profit below this low here, and then could potentially leave a runner on for the high of the new week opening gap. So that's what I noted for Tuesday's trading. Then Wednesday we had CPI news, and similar to how ICT was thinking, he said he thought that previous week's high was going to be taken, and that's what I was anticipating too. So just was sitting and watching what CPI did. We just immediately jumped up to take previous week's high, and we ended up having a SMT with NASDAQ. And as we're coming down here to the 930 open, I was looking for a potential long setup to trade back up into this low resistance liquidity run up in here. And we did get that setup here. Broke market structure, came back down into discount, and then targeting the first PD array in premium, which was this M5 fair value gap here. And then we also had that NAS SMT with the low of CPI. And then the trade that ICT noted was the return to the M5 fair value gap here and targeting the CPI low. Personally, I wasn't too confident in this trade here just because the RR was not good in my opinion, because I wouldn't know where to put my stop in this case, whether above this high here, but then this swing high is so far away. So that's why I liked the long setup to trade up into this low resistance liquidity run, because I wasn't really sure what was going to happen after that, whether we were going to come here and then continue higher. But we did eventually come down, take previous day's low with a SMT. And then here I was anticipating price to trade back up into the low resistance liquidity run again, but there was no setup in here to take. On the 1 minute, we didn't have any retracements, and price just kept going higher, but it delivered as anticipated, which was good. Then in the last hour of trading that I was watching, initially I had a bullish bias because we had this low resistance liquidity run up in here, and I was seeing if price could print some type of bullish PA, but that didn't happen, and we instead got this displacement down here after a very low or low time frame raid of this high. ICT did note this trade in his review. Personally, I probably wouldn't have, if I saw this live, I probably wouldn't have taken it, right? Because when I'm watching the charts off to the side, I was really just looking for any type of bullish price action, and any bearish price action I was ignoring because I wasn't anticipating bearishness at all in this hour. So when looking at this live, I wasn't seeing this as a short. I was just waiting for some type of displacement up so I could then focus back again on the charts. But yeah, since we didn't get that, we had this low time frame setup here to the AM session lows. So that was it for Wednesday. Then by this point, on the close of Wednesday, because we were still near the new week opening gap and it's a Wednesday, I felt that the likelihood of price trading anywhere significant higher or lower for the rest of the week was not really that high, because if it's already a Wednesday and we're still consolidating around the new week opening gap, that means it's likely the rest of the week is going to be consolidation. And that is eventually what happened here. But going into Wednesday or Thursday's trading, originally I was looking for a short since we had that previous week's high SMT, and then ICT told us to focus our attention at the weekly fair value gap below price here for a potential retracement into it. So I was just seeing, I was coming into the the session with that bearish bias in mind. Wasn't really expecting much again because we're close to the new week opening gap, but we didn't print any type of bearish price action at all, so there was no way you could have gotten tripped up in this, which is good. I didn't take any entries. The only thing I labeled was this theoretical entry here. We had the raid occur prior to 9:30, and then 9:30 return down into the fair value gap and breaker, and then we had that displacement up at 10. And I was watching this H1 fair value gap. Originally, I was looking for a potential short setup to form inside this, but because price had such a bullish reaction up into the fair value gap, violating it, I just labeled out this hypothetical entry live to target the equal highs from yesterday during lunch and early AM session, or PM session rather. And we did end up delivering pretty nicely. And this was one of those situations where we didn't get a retracement into discount, but the RR of this trade based on where your stop would be below this fair value gap below, it still permitted a pretty decent RR, 1.4, right, up to the equal highs. So even though we didn't get a retracement into discount, this was still a pretty good trade to take just based on RR. And then the rest of the day, we didn't get anything. Price just continued going higher, and we made equal highs with the previous day high. So at the close of Thursday's trading, I was anticipating that because we formed those equal highs, Friday could potentially make the high of the week and then retrace back down into the new week opening gap. And that ended up delivering pretty nicely. Now, what I was watching for on Wednesday noted this hourly fair value gap that we could trade into. Originally, I noted how we had this SMT break in market structure to the upside and had this bullish fair value gap and M15 mitigation block. Now, I mapped out this trade, but I wasn't anticipating this trade to play out again because it's Friday and we're making the high of the week. And so just based on the weekly Power 3 candle, but also because the whole week was consolidation around that new week opening gap, it's likely again on Friday we're going to retrace back down into it and not make a new high. And that's exactly what happened here, where we just immediately melted through the fair value gap and mitigation block here. Offered no support whatsoever. And instead we got this nice low time frame setup here where we had displacement down back up into the fair value gap inside that 930 to 1010 window. Also had two SMTs, had DXY SMT and US 30 SMT with this high here. So based on all of that context, that's why this setup on the M1 was higher probability than this setup on the M15, right? So even though the M15 time frame was looking bullish, this M1 short setup here had the context behind it of price wanting to draw down into that new week opening gap and price making the high of the week on a Friday. So we're likely to trade back down into the weekly range. So that was all that I noted for Friday's trading. Nothing really here that I thought was high probability within the context like we had back here in the AM session. So even though this week was consolidation, I think it was a pretty good week for setups that presented themselves. Honestly, I think consolidation is much easier to trade than trending environments because we have more raids to take opportunities on. But going into next week, we're still pretty much in consolidation, even on the monthly chart, where I left off on my analysis from the last weekly review video I did like a month ago. Take that off. The monthly is still in consolidation. The same thing with the weekly chart. We have this weekly order block here, and what I'm really watching now is just these equal highs, and if we take these equal highs, it's very likely we're going to take the February high and then trade back up into this volume imbalance back from August. So originally I thought this was going to be a market maker sell model here to take that out, but that didn't end up playing out. But I think the best thing to do is we have to wait for Monday's trading next week because there's really nothing clear here in price. In terms of news, we have a pretty good week with high and medium impact news throughout the week, so there isn't going to be any crazy news events. So I think Monday through Friday is probably going to be tradable. But again, I don't know if price is going to want to come down back into this daily breaker and then maybe dip into the weekly fair value gap, taking out these lows here, April 6th and April 10th. Those are the relative equal lows that ICT set to note. Because on the hourly chart, we returned into this fair value gap and are trading up away from it. So nothing here really stands out to me in terms of how the new week could play out. And again, we've just been in consolidation for the past 2 weeks. So I think the best thing to do is just wait for Monday's trading and the Sunday gap, see where we open. I mean, we could easily just gap higher, then immediately take the high and then go lower. So I'm just going to wait to see what happens Sunday and Monday next week. So yeah, we'll see what happens.